These are three fairly important developments. I think they speak to just how unkillable the enthusiasm for Bitcoin is.
Why is crypto going up today? Bitcoin breaks above $30,000 amid TradFi push, traditional finance push into crypto. And let's look at the Bitcoin price. Since the FTX collapse at the end of 2022, or even the beginning of 2023, Bitcoin has put in a series of higher lows as well as higher highs. And why is this? What's the actual reason Bitcoin's going up? Because wasn't it just a month ago that Gary Gensler was telling you that all crypto is bad?
We don't need more digital currency. We already have digital currency. It's called the US dollar. It's called the euro. It's called the yen. They're all digital right now.
Well, in a yet-to-be-released Mark Yusko interview on our channel, Altcoin Daily, the founder of Morgan Creek Capital Management explains that this is not a coincidence.
Think about this. Not a month ago. I mean, it's not even like a year ago or 2 years ago or 5 years ago. Not a month ago. The SEC was like, you're a villain if you're even touching this space. You're bad. Now, everybody, I mean, Deutsche Bank this morning and Fidelity over the weekend and BlackRock last week, and, you know, everybody's jumping in the pool.
So according to Mark, while regulators were shouting at retail that crypto's bad, they were flooding the market so that traditional finance could take out their positions.
The oldest trick in the book. If you want to buy a lot of something, what do? You shit on it. Right? When George Soros wanted to corner the market in copper, right? What did he do? He didn't go out and buy a bunch of copper. He went out and sold a bunch of copper and spread rumors that copper was going to zero. Then you swoop in and buy a whole bunch after the price collapses. That's what I think went on last year.
The full interview drops early next week. Make sure you click subscribe and have bell notifications turned on. And here's the real reason. As discussed in yesterday's video, here's one out of three big reasons Bitcoin is really increasing. Fidelity, Citadel, and Charles Schwab just launched their own crypto exchange called EDX. And this is a big green flag for institutional players.
First of all, EDX, which is the exchange that Citadel, Schwab, and Fidelity are backing, the important thing that distinguishes it from FTX and Binance and all the stuff we know the regulators don't like is that they're not taking custody. And I want you to understand the importance of this. They're telling you, show up with your own custody solution. We're simply going to be here to match buyers and sellers and handle price. That's probably a step closer to the way traditional exchanges work. We're here at the New York Stock Exchange. They're not holding customer funds. So that's one. Also, they're institutional. They're not recruiting Robinhood traders. So I think that's a big development. And the fact that they went forward with that, given all of the fear and uncertainty and doubt in the asset class, is key.
Now, another big reason is Abby Johnson. And what else Fidelity is doing?
There's credible rumors that Fidelity is readying something seismic. Don't discount those. Abby Johnson has personally been mining Bitcoin since 2014. And then the third development is BlackRock filing an ETF application, and has been pointed out, they've gotten like 500 yeses and 1 no over the years. They're pretty much undefeated. It would be very weird for them to file something just to get, smacked back like the other 30 firms that have filed. So either they know something or they want to make a point in getting rejected.
And here's probably the biggest reason that Bitcoin is going up, because they say when the average retail investor, you, me, when we miss the boat's gone. We missed that investment, that opportunity. But when smart money, when traditional finance misses the boat, they pull that boat right back.
I think, by the way, I'm sorry, I think this is a sign that Gensler is winning. The revolutionaries are not, it doesn't appear, the revolutionaries do not have any momentum. The firms that have a proven track record of working with regulators and being transparent are the ones that seem to have the momentum now. And I think that's because the regulators are getting their way here. So I want to point out that that's what I really think is happening.
Well, by the way, Doug Sifu, who's been, I think, the most critical financial professional of the SEC and Gary Gensler that I can think of, is on the board of EDX, the exchange we mentioned today. and virtue as an investor, just to lay that out there.
Ken Griffin, who hates Bitcoin, is his firm's project.
And good point. Just understand that this isn't even necessarily Citadel or Schwab or these legacy companies saying they believe in crypto, but they are saying there's clearly a market out there and they want to make the money and own that market.
This is a very simple story in terms of what's being done by Citadel and the others, is that they're not telling you that Bitcoin has intrinsic value. They're not saying that. They may not believe that. What they're saying is there's a market here. And the SEC has been very clear. They don't want the Binances and they don't want the Samuel Bankman-Frieds of the world. They want the real companies involved. So it doesn't bless it as a currency. I don't think I'm not going to say ever, but I don't see the point where it becomes a currency, particularly with digital currencies coming from sovereign, but it does mean there's money to be made here. So if you take a look at the money Fidelity's putting in, or BlackRock, or Citadel, it's almost a free option for them. That if something comes out that legitimizes this, they will be there, they'll be there first. And that's who typically wins these things. So that's what they're doing. So for what they're outlaying here, versus what they can gain trading these things over time, being the next NYSE, it's well worth it.
And they're going to own it. They're going to write the rules.
Right. And they will write the rules, and Gensel will work with them to write the rules so you get the Binances of the world out of it. So that's what's here. Don't mistake this for saying this is what you're going to be able to go and buy your Tesla with every day. That's not what's happening.
Also, crazy news in crypto today. Fed Chair Jerome Powell at the Congressional Meeting on Finance this morning, Fed Chair Jerome Powell says crypto does appear to have staying power as an asset class.
Crypto and digital assets in the U.S. has got a market cap of around $1.1 trillion right now. It's been there for a bit. Do you acknowledge that this asset class has staying power in the U.S. economy?
It appears to have some staying power. Of course, that $1.1 trillion was, what was that a year ago? A lot higher.
Yeah, it's had some volatility in large measure due to the lack of legal clarity.
Jerome Powell also spoke on stablecoins, saying we do see payment stablecoins as a form of money.
We do see payment stablecoins as a form of money, and in all advanced economies, the ultimate source of credibility in money is the central bank, and we believe that it would be appropriate to have quite a robust federal role in what happens in stablecoins going forward, and that leaving us with a weak role and allowing a lot of private money creation at the state level would be a mistake. But nonetheless, again, I do appreciate that we've been able to be heard and share our views with the committee.
And of course, all of this is an ongoing story. Make sure you click subscribe. You do not want to miss that Mark Yusko interview. Like always, see you tomorrow.